Hey, hello again, everyone. Hope you all had a great weekend and a great Halloween coming up. Trick or treat, as they say. Peter Frohwein, how you doing? Peter Wilson, Carrie Ellen Wilder, how you doing? Good morning, Singapore. Happy November 1st. Yes, hugs to all. Hugs to Vincent. Give Vincent a hug too there. Um, so what we're going to be taking a look at, excuse me, I was going to do a topic on different ways to invest in gold. And what happened was I came across this thing called robo advisors, and that really led me down a different path where you have to ask the question where just how much do algos control trading. They're in our daily lives, Spotify music lists, news feeds on Twitter, on Facebook. They control or influence a lot of what we see, a lot of what we research, a lot of the knowledge that we try to obtain. So I became very curious in what exactly are robo advisors and just how much are algos in the markets. And I think you guys may be surprised. So this is something that we'll take a look at, and of course we'll discuss, and then we'll go over recent interview with Gerald Celente, take a look at a few items on Twitter, and of course our website superbullion.com.sg for those of you that are interested, or let's just say waking up to what gold and silver can do for you. So I'll be with you guys shortly in about 20 seconds or so. Polar Wolf Pete, how you doing? I'm hoping it's going to be a good show because I was surprised with the things I found, and I wanted to pass it on to you folks as well. So I'll be with you folks shortly. Chris Primer, aloha, how you doing? Henry, hola, how you doing? The MiG-26, yep, saddle up and silver up. We're going to get started with this live stream. I'll see you guys very, very soon. All right, hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I am your host, Patrick Vieira, and welcome. Welcome. If you are new here, go ahead and type in new and where you're from. We'll try and go ahead and acknowledge you. For the rest of you, thank you all for being here and supporting the channel. Really, really, really do appreciate it. You can always find us on social media, silverbullion.com.sg, where, yes, we do sell silver and gold. You can store silver and gold with us. We're not a third party vault, we actually have our own. And we're currently renovating to what will become known as the Reserve, which is going to probably be the world's biggest silver vault, or the world's biggest vault by capacity anywhere in the world. So stick with us. You're going to find some interesting things ahead. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL is where you can find us on Twitter. PL for Private Limited. Audio only versions can be found on bit.ly or bit.ly/SBTV iTunes or /SBTV Spotify. And Crisis Tracker, you can go ahead and download that Telegram app, or maybe have it already, either for your desktop or your mobile phone. And you can go ahead and search Crisis Tracker, one word. And this is where Vincent and I will go ahead and we'll put in some news articles, as it pertains to finance, economics, gold, silver, things like that. And I think we're missing one here, Instagram. So I'm going to have to we'll have to reload this graphic and make sure for your Instagram followers that you can find us there as well. So these are the places that you can find us on social media. Upcoming guest is going to be Nick Giambruno from the Financial Underground. Nick Giambruno, again, the founder of the Financial Underground, which is an independent research provider. And Nick and the Financial Underground's mission is to uncover the truth about money and markets that you're not supposed to see. His research puts together the pieces to reveal the true big picture and how to get positioned in unstoppable investment trends ahead of the crowd with smart speculations. So again, Nick Giambruno, the Financial Underground. Be sure to hit that bell so you can be notified. Subscribe, and thumbs ups are always appreciated. Let me take a quick look here at a few more people that came in. Guatemala, how you doing? And WWG, WGA, okay. How you doing? Peter Wilson again, how you doing? Let's see. Henry, this is probably the first time I got the notification on time. Yeah, let us know how these things are going, because we've been hearing quite a bit where, people got unsubscribed, people don't get notifications, things like that. So of course, the algos, which we're going to talk about today, they're doing their thing. Olga Bialas, sorry if I pronounced that wrong. Greetings from the Philippines. How you doing there? Kumusta, Olga? So again, a lot of this is because we appreciate your support, and within that we want to give you a $10 Amazon gift card. If you'd like to get that gift card, be one of the first five to answer a question from a past interview correctly in this live stream before the timer runs out. In this case, it's going to be the past Gerald Celente interview. US winners, you're going to be given a link to download the gift card, and non-US winners, hey, you can go ahead and ask Amazon to exchange my gift card if it's not usable in your country, and you'll have to provide us your email during this live stream. And what will happen is my colleague Vincent, I'm not sure if he's still on vacation. He should be. He works too hard. He should be on vacation all the time. But I'm not sure if Vincent is here or not. But we'll go ahead and we'll send out these emails at the end of the live stream. At the end of the live stream. So you'll have to go ahead and send us your email address, and we'll send out, the gift cards at the end of the live stream. So again, appreciate you all being here. James Richter, how you doing? Dave Hilderman, 49 Fine, great bunch of people. Truth Monster, yes, and Henry, is Vincent here? You know what? I'm not sure. I'm not sure. It's okay if he's not. Hey, no problem. He deserves his vacation. Lieutenant Colonel, appreciate it. Thumbs up from the Lieutenant Colonel, retired USMC. All right, so here's the question from the last Gerald Celente interview. Hopefully you watched it. If not, maybe you know enough about Gerald to know what his answer is going to be. So according to Gerald Celente, when all else fails, they take you to blank. All right. According to Gerald Celente, when all else fails, they take you to blank. So go ahead, take a guess, give it your best shot. If you know Gerald Celente, you probably have heard this coming from him before. So go ahead and give it a shot. You just might get it. But hopefully you did watch the past interview in order to know what it is. So let me go ahead and see what people are putting here. Hang on a bit. Let me see. I see war. What, which I will take as war. I have pretty fat thumbs, so I'm guessing Polar Wolf Pete. Polar Wolf Pete, you have some fat thumbs as well. You meant war there. Peter Frolwine, Halby. Guys, that's it. You guys already got it straight away. Straight away, you folks got it. So what we'll do is we'll just go ahead and stop it here, because we do have the 5 winners. Again, that is going to be Truth Monster, nailing it with war. Jason, Ponto, war. Polar Wolf Pete, and again, I'm assuming that's war. I have fat thumbs. I probably would have typed in what myself instead of war. Peter Frowine says war, and Harold B says war. So these were the first 5 that came in. Email us at sales@silverbullion.com, and we'll go ahead and get your email through there. I'm not sure if Vincent is here, so I got to find a way to get it to you. But for you 5, go ahead and email us at sbtv@silverbullion.com. .sg. So sbtv@silverbullion.com.sg, and we'll go ahead and see if we can get these out to you after the live stream. A lot of folks said war, so I'm guessing a lot of you do follow Gerald Celente, and that's great. So let's see if that is what Gerald actually said, and we'll revisit him and make sure that he did indeed say war.
When all else fails, they take you to war. You go back to the Trends Journal cover 2 days before Russia invaded. From COVID war to Ukraine war to World War. When all else fails, they take you to war. They screwed this economy up in the global sense. They've destroyed the lives and livelihoods of billions of people with the COVID war. Destroyed it. Locking down businesses. Hey, I'm the governor. I'm the president. I'm some piece of crap politician. Close down your business. Stand 6 feet apart. Put a mask on. Go out of business. Look what's going on with the commercial real estate sector. Look at office occupancy rate. In Europe, it's about 45%. In America, it's about 50%. How about all the businesses that depended on commuters? How about all the people that, hey, I don't want this office space anymore, man. Don't need it. I got people working from home.
Yeah, I'm looking at the comments. A lot of you folks did hit it. You guys nailed it with war. Fortunately, unfortunately, I mean, we got 5 to give away. But again, thanks for your support. Gerald Celente says war on the horizon. War on the horizon. What do you think? Because it does seem that peace is just not something you can put on the table today. Then again, are we already in a war? I mean, we are supplying things to the effort, and are we by proxy kind of there already? And who is they? Who is they when we talk about the they part of it? So anyway, was the pipeline sabotage something to provoke a war? If yes, will more things happen to provoke a war? In other words, as some people like to say, poking the bear. Are things going on that are poking the bear? And yeah, I know we make light of this, but what are your thoughts? Because this is pretty serious here. So, what are your thoughts on this? Is war on the horizon? Are we already there? Who is the they that are trying to push the world into it? We already saw one. I think generally we could all see it was a sabotage. Do you think we're going to see more of these things to so-called poke the bear? So I'll be looking forward to seeing your thoughts. So I'll play another clip from Gerald Celente while I take a look at your comments.
The dollar's strong because the other currencies are so weak. Look again. Look at the sterling. Oh, it's only at an all-time low. How about the euro? Oh, yeah, we're going to keep interest rates really down into the toilet, and the euro keeps going lower and lower. It's at a 20-year low. There's no competition, even though the United States has a debt level of over $31 trillion. And as long as they keep raising interest rates and they're above the other ones, the dollar stays strong. It's not that the dollar is strong because of the strength of the dollar is strong because of the weakness of all the other currencies and the other economies. It shows you how bad the situation is in the world.
All right. So dollar strength equals other currency weakness, and this is something we've talked about, where you may see the dollar getting stronger against other currencies, but is it getting stronger in purchasing power? So that's probably the real question here. And there's no competition to the U.S. dollar. It's sort of the cleanest shirt in a dirty hamper, or whatever they say, something along those lines. Um, for now anyway. There may not be competition, but the way things move, you could find something happen overnight, whether it's the arrival to the Swift system, because in truth, we just need a different way to transfer money, or if something else comes out to be. A lot of us are hoping it will be a type of a gold backed currency. Raising rates keeps the dollar strong. Dollar strength does not mean purchasing power strength. A question for you: how high do you think rates can go to? How high do you think they can go? And what will be the cause for the wheels to come off? So I'm curious to know what your thoughts are with this. Peter Frowine, I see your question here. Go ahead and email sbtv at silverbullion.com.sg. So sbtv at silverbullion.com.sg. And then we'll go ahead and hopefully everybody is on the honor system here, and we'll go ahead and get those out at the end of the live stream if everything goes according to plan. So yes, we are at war already, sadly. James Bell, we are in a war for people's freedom. You know that word freedom, um, it has a specific meaning to me. It has a specific meaning to you. And one thing I've learned living outside of the US is freedom is not defined the same everywhere throughout the world. And coming from the US, that surprised me. But this is true. Freedom is not defined the same all over the world. Some people will give in a bit of what we would call personal freedoms for economic freedoms. They like the choice of more economic freedom. So it just kind of depends where you are in the world. The definition of freedom is not universal, but I do believe that people do universally want freedom. if that makes any sense to you. So anyway, I'll play one more clip from Gerald Celente.
My first buy of gold was at $187.50 an ounce back, I think it was 1977 or 78, around then. And I've been buying it ever since. I buy it and put it away, buy it, put it away, buy it, put it away. No, to me, gold is the number one safe haven asset. And although gold prices are going down because the US dollar is getting strong, when things get really terrible, gold is the only safe haven asset, as I see it. And I don't give financial advice. The motto of the Trends Journal is think for yourself. We tell you what in the world is going on, what it means, what to do, but you do what you want to do.
All right, so buy gold and put it away. Yes, we do. That's what we're doing, right? All of us are doing this. We're buying gold, we're buying silver, we're putting it away. Gold is the number one safe haven asset. And of course, think for yourself. I want to ask you guys though, does the gold price going down mean it's a bad investment? Does it mean it's a bad investment? I want to know your thoughts on that. When you do see the price going down, do you kind of, shake your head and then say, here we go again, my investment is bad? Or are you okay? Is this something, you've come to terms with, that maybe this isn't a 100% investment because it also has the component of being on insurance? So I'd like to know your thoughts on this. Let me go through a few comments here. 5%. Patrick Bateman is saying 5%. Uh, you know, I thought it would have gotten up to about maybe three and a half tops, and then they would have had start to pivot. It looks like they may get to that five, and if they do, I'd expect to see a whole lot more pain. But you could be right, 5%, and then the pivot. If that is true, that'll come sometime next year. I would suppose. So anyway, those are a few things from the past interview with Gerald Celente, and I will go over to his Trends Journal. Got a nice cover there. We'll go through his weekly message. The Fed looking to slow down, talking about that 5%, and a recession. So according to Gerald Tricks, no treats, happy Halloween. Who needs ghost stories when there's so much to be afraid of by just walking up and turning on the news? Now, what keeps you up at night? Nuclear Armageddon, perhaps? An economic crisis? Maybe. Not being able to pay your mortgage or your car loan? As for the tricks, no treats. We've been forced to wear the mask for years, so who needs Halloween? Last week, our cover depicted the White House as an insane asylum, but it could just as well be presented as a haunted house filled with the half living who turned their backs on peace and embraced the horrors of war. Need more proof? This is last week again. Yesterday, the big news was 30 House Democrats who call themselves progressives sent a letter to the president urging him to begin negotiating for a peace settlement in Ukraine. So they wanted to negotiate for a peace settlement. Tricks, no treats. And today, the same progressives, they regressed, cowering down and being criticized for sending that letter. Rejecting the calls for peace, the leader of the progressive pack, Jayapal, said they maintain unequivocal commitment to supporting the Ukraine. As Gerald says, numbnuts. So one minute they were saying, hey, let's have peace. Next minute they kind of backed down. They didn't want to push the peace. Anyway, a new Gallup poll found that just 7% of Americans have a great deal of trust in the mainstream media. Just 7%. Are you one of those 7%, or are you one of the 93%? That's a question there for all of us. Americans are wising up, and I don't think it's just Americans. I think this is people all over the world. All over the world, this is happening. People are wising up with that corporate prostitutes, as Gerald likes to say, and do not have their best interests in mind, that the truth comes at a distant second to political messaging. All indicators are signaling that the US Federal Reserve, this is the Fed looking to slow down, another topic here. Indicators are signaling the US Federal Reserve will add another 3/4 of a point to its key interest rate when the Open Market Committee meets next week. However, in that session, we will have a very thoughtful discussion about a pace of tightening at our next meeting. Fed Governor Christopher Wallace said in a speech earlier this month. So far, Fed officials' internal discussions are breaking along two lines, according to the Wall Street Journal. Now, one camp wants to slow down the pace of increases, and then half of them next year to see how inflation and the economy are reacting to this year's headlong rush to higher borrowing costs. And the time is now to start planning for stepping down, says Mary Daly, president of the Federal Reserve Bank of San Francisco. She said this back in 21 October. We're not even sure we've got rates high enough to push services inflation down. And that is Neil Kashkari, who said this back in the 18th of October. So they are seemingly starting to split. Some want to continue the pace, some want to slow down the pace. Recession. Chances of a US recession within 12 months has risen from 50% last month to 60% now, according to 42 economists responding in early October to Bloomberg's monthly outlook survey. A significant tightening of the financial conditions is a clear headwind to growth and comes at a time when consumer and business confidence is already under immense pressure from that rising cost of living and falling equity, bond, and real estate prices, according to James Knightley's ING, who's ING's chief economist, international economist. And this is what he had told Bloomberg. Shopping, along with the jobs market, will fall victim to the Fed's unrelenting campaign of the interest rate increases. Bloomberg also said the labor market will add less than 70,000 jobs in every quarter of 2023, the economists expect, with unemployment rising to 4.5% by the end of next year. I think that number will grow significantly higher. A business investment will decline for the next 3 quarters, respondents said, reversing last month's prediction of increases. And Bloomberg Economics is even more pessimistic. Its newest computer model of the US economy guarantees a recession within 12 months, rating the probability at 100%. So, a 100% probability of a recession in 12 months. I think we already have it. Anyway, let's take a look at the CPI inflation. Again, what you want to see is this green line at the bottom, inclining up and to the right, and that'll mean expectations are good. Economic expectations are good. Flat means optimism is falling, and inverted means this 100% guaranteed recession within 12 months. Some may even call it a bear market. So, hey, let's take a look at how CPI has moved up and down, and let's take a look at the green line, which represents the bond yields. So, here we go. So you can see January still all is well, incline up and to the right, even though the yields are getting pushed up. It still had that incline up and to the right, which was a favorable outlook. And then when you come March, April, May, June, you really see the middle section, the 1 year, 2, 3, 5, 7, 10 year start to flatten out. And then later on, when you come through July, August, September, October, you start to see the shorter end or the mid, uh, the 1, 2, 3, 5, 7 years, excuse me, you start to see them go higher than the 10 year. And this is the so-called inverted, the inverted yield. So you can physically see it here. You can go all the way back to the 10 year, which is 4.02, third one from the right. 7 years offering you more than a 10 year. 5 years offering more. 3 years offering you more. 2 years offering you more. 1 year, a 6 month, a 6 month yield, 4.51%. A 10 year yield, 4.02%. So things are not all going that well, as you can visually see here. Okay, so I'm going to move on to take a look at our website, silverbullion.com.sg, but I want to take a look at the comments here. Uh, let's see, Carrie Ellen Wilder, gold is not an investment. Gold is money. Save in money always. You know what? That's a great point. That's a great point. Peter Frohwein, no, buy more gold now and silver. Absolutely, absolutely. Holger, gold going down. This is true. Once again, going down in price a little bit, but it's a good reason to buy. It's a good reason to buy. This is when you want to buy. That's another great point there. Accumulation. Accumulation is important. Let's see what else is out there. Okay, So I'll move on. And okay, so let's take a look at the silver bullion website here. Let me go ahead and refresh this. All right, so we got some things going on. LBMA bars, 55 cents an ounce over spot. So if you're, these are probably, not probably, they are the best value for money. Is the larger bars, particularly the LBMA bars. 100-ounce silver bars, $2.35 over spot, which is very good in these times right now. And 100-gram gold bars, $38 per ounce over spot. So both of these, very good buys right now. Just to clarify, $2.35 per ounce over spot. And of course, the LBMA bars. Again, if you are looking to for value for money, these are where you want to where you want to go to. Silver down 8 cents, currently at 19.25 this morning here in Asia. Gold down $1.51. So both metals relatively unchanged. 1644 is what the price is here in Asia this morning. So both gold and silver not really moving all that much. If you want to take a look at platinum, hasn't really moved that much either. Nickel is up $80 or so. So generally, metals aren't moving today. That silver gold ratio, at least at this time right now, silver to gold ratio, we're looking at 85.4. And what this means is you take the gold price and you divide it by the silver price, and you get 85.4. So in theory, this means that it takes 85.4 ounces to equal 1 ounce of gold. Now, why do we look at this? We look at it because anytime silver is above 80, silver is seen as undervalued compared to gold. And it is a time where you may want to be purchasing silver. Now, nothing we say here is financial advice, professional or otherwise. It's just some observations we make. So at 85.4, you probably want to be buying silver. And then what happens is the ratio moves. It may go up to 100, it may go down to 50, but in time, what people have found out is you can go ahead and flip your silver to gold, flip your gold to silver, and you can accumulate more and more and more as time goes on. So this is why we do take a look at the ratios. Right now, 85.4. So maybe a good time to be taking a look at silver. I want to go back to this LBMA bar. For those of you who do store with us, we have 321 in the vault that you can go ahead and buy. We have one at the shop you can come down and pick up. Again, as always, make sure you bring a trolley or something. This thing is heavy. So excuse me. So make sure you bring a trolley. So if you do have an account with us, there's 321 readily available for you to own. If you don't have an account with us, but you want to go ahead and get these bars, just sign up as a silver bullion user. 6 types of account: personal, joint, trust, joint account with the minor, a business account, and a retirement account. This is important. We're going to be talking more and more about these retirement accounts because, as you folks know, uh, inflation is going on, your purchasing power is going down. Your 401ks, things like that, they aren't going to get you as much as you thought it once would. So perhaps storing or rolling over some of that money, as they say, into gold and silver, a precious metals retirement account, may be a good thing to help you and store the value of your wealth. Nonetheless, personal account, very simple to do. Just go ahead and fill out an application, provide us an ID, and we'll go ahead and get that set up for you. And as always, please do let us know that you found us through SBTV if you are a new user signing up for an account. This really helps us out a lot. And I know a lot of you folks are on the fence trying to decide, what is this silver and gold? What does it do for me? The more you know about it, the more you will find out that it is a store of wealth. It is a hedge against what's going on. So open up an account, have it ready, and we'll move forward from there. This is something good to have in place already. All right, taking a look at Twitter. What's going on in the Twitter sphere? They can only control us because we use their currency. Yeah, all right. That's an interesting statement. Uh, but a fair question here. Their currency. So who is they? Always, who is they? So when you control the money, you excuse me, you do control. You're going to control the people who use that money. Steve Henke, let's see, Germany, thousands gathered to protest against the EU and its disastrous economic policies. Disastrous economic policies, starting with EU sanctions on Russia. You probably won't see protests like this covered in the mainstream media where they've been canceled. I haven't seen this in the mainstream. Have you? Have you folks seen this in the mainstream? I mean, again, uh, we are kind of being, I mean, let's just be straight. We are being influenced through what we see, through what we know, through what we search, and it's basically algos. So this is a fair statement here. Are you folks seeing this? Moneko 64, popular guy. Russia, China may be preparing for new gold-backed currency, but expert assures U.S. dollar safest currency. This came out on Fox Business. Um, I think a lot of us would like to see a gold back currency though, because we do understand that a lot of the world's troubles today has come through a lack of trust in a currency, weaponization of a currency. Uh, these things we see and we know. So if we did have a type of a gold backed currency, the one in control of the creation of this currency will be held to account. And therefore, you can't print as much as you want, which means you can't, go into to wars that don't end. You can't fund so-called fund all of these free gifts that you pander for votes. Uh, governments are held to account, and I think the people do want that, but people also have to understand if we hold the government to account, we're going to have to hold ourselves to account as well. So we'll see how this unfolds here. John told, imagine being a CEO and then telling stockholders that massive earnings losses came from nowhere. I don't know. It just came from nowhere. And then keeping your job as long as you want. Well, this is what Madame Lagarde had said, something along the lines of inflation came from nowhere. I don't know where it came from. It just came from nowhere. Hey, gaslighting, gaslighting 101. That is gaslighting 101. Dollar Vigilante with digital ID. Hey, Mr. Claus, we'll see you where you are sleeping. He'll know when you're awake, and he'll know when you've been bad or good. I guess will be good for goodness sake. Of course, this is talking about CBDCs, and yes, how they are going to know every part of our life, what we spend on, and probably more than just that. So, okay, we'll see how that goes as well. Mondo Perk Stacker, I'm glad to have some silver in hand when there's so little in stock left. You guys, I need your help with this because I'm hearing up and down, left and right, that trying to get silver is getting harder and harder. I'm hearing this particularly in the West. Although here in Asia, so far, no real problem getting silver. So I'm hearing that right now there is a disparity between what you can get in the West and what you can get in the East. And then I think as some of you folks know, we did also see reports from Bloomberg, Reuters, and others where there's been a movement. The flow of metals has moved from West to East, which maybe perhaps why it's getting harder for people in the West to get it, and why the East is still okay with as far as getting stock. So let me know, is it getting harder for you in the West to obtain metals? Willem Middelkoop, new Dutch law being prepared. Banks need to monitor all payments from 100 euro. This is probably connected to the planned CBDCs, where small payments still will be anonymous, while larger will all be registered and monitored. And we went over this in the past live stream, where it seems to be that if you're just going to give basic information, perhaps your name and phone number, you're not going to be able to transact that much. You're going to have a limit on it, and then the more information you give, the more you will be able to transact daily. So there's also a different movement on how these digital currencies will be used. And this one here, anything over 100 euro is going to be look like trapped in some way. All right, crazy times. Rob Keynes, when she asked what's my retirement plan, the answer is gold. Gold, gold, and gold. And again, this is why we had mentioned about the precious metals IRA. your purchasing power is going down. If you really want that store of wealth, consider rolling over that IRA into a precious metals IRA, a self directed IRA. If you need help with that, we can go ahead and help you do it. Just email us sales at silverbullion.com.sg. I'll stop the Twitter there. We're going to take a look at our topic of the day, algos, AI, machine learning taking over. Are they taking over the markets as well? Okay, so let me take a look at a comment or a few comments here before we move on. Um, let's see. Beaver, you know, I'll tell you what, that's a fair question. You can't flip with dealer spreads as they are. Care to explain your strategy? Okay, if you're looking at coins, you're going to have a harder time trying to flip. If you're looking at bars, it is easier to flip, but with that ratio, it's not a one-to-one flip. Yes, there are the premiums, the spreads involved there, but the silver to gold ratio, it's use it as a guideline to say, if you had bought, let's say, at a time when the ratio was 100 to 1, okay, if you had bought 100 ounces of silver, and then let's say that ratio goes down to 50, because it does move over time, you could then flip that ratio. You could flip your 100-ounce silver bar into 2 ounces of gold. Now, in theory, yes, you can do this. In real world practicality, you do have the premiums, you do have the spread. But overall, it is a strategy that people will use. Maybe you may lose 3, 5, 7, 10 ounces or so, perhaps, but that more than likely would still be a good trade-off to flip over into gold. Instead of buying gold at a higher price, you buy silver at a lower price. So it is a good um, it is a good strategy. It is a good theory, and it is something that I would look at. But if you're looking at it one to one, no, of course not, because premiums and spreads, you do have to take that into account. So again, that's a fair statement. But if you look at it as a guideline, as a strategy to accumulate more gold over time, then yes, you this is something you want to look at. Even if you want to accumulate more silver over time, it's something you do want to take a look at. So that's a fair statement there. Fair statement. Let's see what else is out there. Um, Carrie Ellen, Wilder, you can't have a CBDC unless people get digital IDs, hold out, and refuse to get a digital ID. That's how we defeat the tyrants. I'm with you. I'm with you. All right, so let's see. Peter Frowine, yes, getting harder and more expensive. I guess you're talking about metals. Again, this is what I'm hearing in the West quite a bit. I'm seeing it over on Twitter quite a bit, where guys are saying it's getting harder to acquire. Let's see what else is out there. Um, let's see. Let me take a look. Okay, all right. I tell you what. I'm going to move on to the topic of the day: AIs, machine learning, and things like that. Okay. So, just how much are algos and AI controlling or influencing our lives? Spotify creates a playlist for you. Twitter decides the feed you see. YouTube recommends some and not others for you. Give us a thumbs up. We need those recommendations. Well, some say something, and next thing you know, an ad pops up on Facebook for what you just said. Now, I see this quite a bit. I may, talk about food, for instance, and next thing you know, on Facebook, an ad for that particular type of food pops up. Guys have been saying this for a while. Is AI listening? Is it listening? I'm gonna say yeah. I mean, this is far more than coincidence. I mean, you talk about it and poof, there it is. It shows up. So again, Spotify creates a playlist, Twitter decides the feeds you see, YouTube recommends some, not others. And if you say something, next thing you know, hey, it might pop up. It might pop up in your news feed or as an ad or something else. Now, when I started looking for a topic for this week's live stream, I was looking at the many different ways to buy, own, invest, sell, and even collateralize gold. This is what I was looking for. And as always, things took a turn and I entered into the spooky and ghastly world of algos. So I was working at the shop the other week, talking with many people, and a common question came. Customers would ask, why should I invest in gold and how do I invest in gold? Which was my original thought for this week's live stream. coming from what I'm hearing from customers. Now, so after several chats about how you can buy ETFs, digital physical gold, and all those types of things, I went over to a local bank website here in Singapore, and he and I both noticed the term called robo advisors. So we're in the shop, and then we come across these things. One of them called robo advisors. And this is what led me into taking a look at algos and the markets. Now, this made me really curious as to just how much are algos robo advisors with the aid of machine learning and mathematical coding making trades and taking humans out of it. And this is important because I want to go back to something that someone said back in 2017. Interesting. And this is Mr. P. All right. So Mr. P said that he has joined the war of words concerning the international race to develop artificial intelligence. Speaking to students, this was back in 2017. So let me just get to the gist of it here. Artificial intelligence is the future, not only for Russia, but for all humankind, said Putin. Uh, it comes with, reports RT, it comes with colossal opportunities, but also threats. Threats that are difficult to predict. Whoever becomes the leader in this space will become the ruler of the world. Interesting words there. So, with that in mind, for some reason, I thought about that famous quote by Mayor Rothschild. I think most of us know which one it is. Now, why did I start to think about that quote on the back of what Putin just said? Because we know if you control the money, you don't care about who governs the area your money is being used in. You have power, control, influence over them. And that quote, of course, being coming from The Economist. This is also way back, September of 2012. Give me control of a nation's money supply, and I care not who makes its laws. So said Mayor Amschel Rothschild, founder of the Rothschild banking dynasty. They went on to talk about Bitcoin and things like that. But basically, the main point is give me control of a nation's money supply, and I care not who makes its laws. So with that in mind, if the leader of AI will control the world, and controlling the world comes through controlling the money, and if money is something that puts a value on things in the marketplace, then wouldn't you have to control or at least influence the markets to get to that point? Isn't that what we hear algos do? Isn't that what robo advisors do? So, as mentioned, I did start out by looking at different ways to invest in gold. And this is the website that I came across. This is the Development Bank of Singapore, DBS, their website, investing in gold, 14 April 2022. Now, if you only got a minute, what they say, I hope you got more here. The advantage of investing in gold includes it being a risk diversifier, a hedge against inflation, and a safety asset. There are three main ways to invest in gold: physical, ETFs, and UTs, and through robo advisors. Gold ETFs are a low cost liquid option for investors looking to add the precious metal into an investment portfolio. So let me go down here a bit. Um, let's see. Okay, so ways to invest in gold again. You can purchase physical, you can do an ETF or robo advisors. And so this kind of caught me, because I'm trying to figure out what the heck are robo advisors. So with robo advisors, they're gaining popularity among retail investors. They make a viable option for those who would like to gain exposure to the yellow metal through managed managed portfolio. Basically, all you have to do is select a robo advisor that has allocations to gold as part of its investment strategy. Many robo advisors with a diversified global focus have exposure to gold through gold ETFs or gold miner ETFs. So this word robo advisor, what is it? Well, if you've got another minute, robo advisors are digital platforms that provide automated algorithm driven investment services with little human intervention. So it's important to understand that most robo advisors provide investment services, not financial planning, and this is not a sure win. But the thing that got to me here is it's automated algorithm driven with little human intervention. Okay, so little human intervention, that's what it means. It's mostly algo driven. And here's the thing though, we all know how central banks have been pumping up the markets for decades. Central banks have been intervening. Mainstream media then says, we have recovered, we've recovered. So, where in this world would a machine look towards gold or silver if the Fed has it all under control? And the media rides shotgun with the Fed, with the governments, with that notion that, hey, everything's under control. If the machine also thinks everything is fine, would it move the gold and silver price? If, hey, if everything is fine, would it move the gold and silver price? Machines, algos, robo advisors, it's not human. These are not human. Therefore, human emotion is eliminated and it doesn't drive the market. In fact, top investors, they will also tell you to be a good investor, you have to take out emotion. You have to take out that emotion if you want to be a good investor. Well, that's kind of what algos do. Write codes. Algos, they minus emotions. So far, this is kind of starting to make a bit of sense here. This is what top advisors say, remove emotions. That's what algos do, remove emotions. Maybe one emotion though is of course still FOMO. But there was a time where current events drove the markets, drove the price of oil, drove the price of gold. But today, I'm going to label this a game, a mathematical game that machines play that now without humans and emotions move the markets. Fact is, people sometimes put their emotions in it, and then people sometimes they make mistakes.
Sometimes make mistakes.
Yes, they do.
How can I talk?
It's not a real voice. This box just interprets signals from the computer and turns them into sound.
Shall we play a game?
Oh.
I think I missed them.
Yeah, weird, isn't it?
Yeah.
Love to. How about global thermonuclear war?
All right, let's hope doesn't go that far, but I'm sure, hey, I'm sure there are algos at work and machines trying to decide how a war like this could be won. When it does, when it figures out a way to win it, what happens then? What happens then? Let me take a look at a few comments here. Mr. Razor, this is a good one. This is something I've said myself also. Do robo advisors have a fiduciary responsibility and have errors and omissions coverage to protect the consumer? Can we hold AI accountable? This is something I brought up as well because when we see these traders, they they get charged with spoofing and these types of things. How do you charge a machine? The algo did it. I mean, how do you charge that algo? So it's getting to a point where the machines are so heavily in part of day-to-day things. Like I said, our news feeds, what we hear, playlists that we see, things like that, things we even don't see, things we search. Why wouldn't it be in the markets anyway? Another topic for another day. Point is, humans, we can make mistakes through emotions. You don't want to trade on emotions and things like that. So again, these things are, we can talk about another day here, but make no mistake, there is a financial war going on, an economic war going on, a war for resources going on, and I would suspect the name of this game, the same as the game Monopoly, where you want to acquire so much property, so much resources, so much money, and take over and win the game by taking everyone's assets, the wealth transfer that we always hear, taking everyone's assets, maybe even bankrupting them, right? This wealth transfer. I want to show you something maybe you folks have seen before. Some of the rules of this game, this Monopoly game, that are very interesting because when you took a look at the game of Monopoly, you also see it happening in real life. Let me show you this website here. It's PDF. This is from the actual game of Monopoly, where everybody starts off with a certain amount of money. Interesting, $1,500. Where were people given $1,500 before? No, that's pretty interesting. So anyway, all remaining money and other equipment go to the bank, stack the bank's money on edge in the compartments. Okay, so we got to select someone as a banker who will also make a good auctioneer. A banker who plays in the game must keep his or her personal funds separate from those of the bank. This reminds me of Glass-Steagall. Once we did away with that, investment banks and regular mom and pop, I mean, banks could basically go ahead and take the risk of investing where once they couldn't really go into the market. So Glass-Steagall prevented them from speculating. So you need a banker who plays or who keeps his personal funds separate from the bank. When more than five persons play, the banker may elect to act only as banker and auctioneer. All right. So besides the bank's money, the bank holds the title deed cards and houses and hotels. Do they hold your mortgage? Yes, they do. Houses and hotels prior to purchase and used by the players. The bank pays salaries and bonuses. It sells and auctions property and hands out the proper title deed cards. It sells houses and hotels to the player, to the players, and loans money when required on mortgages. The bank never goes broke. This is key. The bank never goes broke. If the bank runs out of money, the banker may issue as much more as needed by writing on any ordinary paper. All right, they can write on any ordinary paper. Isn't this all what we see today, this game in real life? All right, that's another topic for another day. But what we need to know though is how much algos and machines, how much do they control the markets? Institutional investors are very concerned about their capital, thus, they require a system capable of making wise choices. Automation of processes reduces over trading dramatically because some traders buy and sell at the first indication of a trade window opening, and these techniques lessen the possibility of errors brought on by people. It responds to marketing conditions in a split second, making it a desired investment option. Now, according to Wall Street data, believe this or not, algorithmic trading accounts for around 60 to 73% of the overall US equity trading. As per Select USA, the US financial markets are the largest and most liquid globally. An AI company, Sentient Technologies, based in the US, operates a hedge fund that built an algorithm processing millions of data points to find trading patterns and forecasting trends. Let me take a look at a few comments here. William PMCD, wisdom is a human virtual computers. I don't think so. Exactly. Carrie Ellen Wilder, algos are designed to extract wealth from consumers and funnel the profits to corporations involved. Consumer will always be a net loser by design. This is true. This is true. Okay, so let me move on here. Algorithms. Okay, algorithms. Human traders in no way can process millions of data points the way the algos can. It's similar to how a calculator can speed wise and accuracy wise beat us 8 days out of the week. So, what kind of work have humans tasked the algos to do? Or more importantly, we know the influence algos and AI have in our daily lives, but do algos also influence the markets? I keep coming back to this. Do they influence the markets?
What it has done to the business is just bringing volatility on the table. But 80% of volume, daily volume in the US, are machines.
Let me just recap. 80%
close
of
to
the
80%.
daily volume
Yes.
is machines.
Absolutely. So what you get is lack of focus of earnings, a lack of focus on outlooks, and you just get short-term movements based on very specific data that is released every day, and that creates noise. And I think if we, us as fund managers, we just simply need to focus on earnings, outlook, delivered or not, raised or not, beat or not, and then you get a better view. But all this noise that we're getting today is just created, or I mean, the volatility is taken out of this noise.
Okay. 80%. Okay, so machines take away the noise. 80% of daily volume in the US are run by machines. Algos get very specific data for short-term movements. The key word I saw here was short-term. You see, gold and silver are long-term. Algos are looking for data to help them out with short-term movements. Okay, so these are two very, very different things. The fund managers simply need to focus on earnings, and they want to remove the noise. Short-term movements, isn't this what we see with gold and silver? Or it's really not what we see with gold and silver. We see these mysterious short-term movements, though, to the downside. Many, many times we see mysterious movements to the downside for gold and silver short-term, instantly. And then it takes a day or a week or maybe a month to get back to where it was, even if it does get back to where it was. And all the while, things are getting worse around us. Just take a look at the news, where without question, precious metals should be moving up. They should be moving up in price, especially when we see demand. Isn't the way it worked decades ago, with these same sets of current events before algos? Isn't this how it worked before algos? Something went on in the Middle East, oil price went up, gold price went up. We would see all these things. Inflation, you see the gold price without question moving up. Before algos, pre-algos, we saw this. In the world of algos, age of algos, for some reason, in my opinion, we're not really seeing this. So are algos moving or not moving the markets? Are they programmed in a way where fund managers make profits? Obviously, yes. But here's more.
The machines themselves pick up on obviously very sophisticated algorithms as well, and pick out certain words as well. So if, for instance, an oil minister would say, oh, we're going to cut production, but says it 10 times, the machine might well move 10 times on the back of we're going to cut production as well. So do you think there's just too much noise out there, not coming just from the machines, but coming from senior market participants who are using those algorithms, who are using those machines to manipulate price movements?
Yes, I mean, simply put, in principle, you're right. But I think it's slightly, obviously, a bit more complicated than that. But I mean, obviously, what these machines are picking up is the change in wording. The same way we analyze what the Fed is saying on a meeting basis, and try to analyze the change in the wording, a change in the outlook, what the shareholder letter is saying, what the press releases are saying, and then these machines are just taking a view. And then when the data or significant data comes along, they obviously abnormally make or take a position on it.
Okay. let's look at it from the other side of the coin. I mean, because what this guy is saying is algos can be influenced. If they pick up on all these different types of words and things like that, they can be influenced. But let's look at it from the other side of the coin. Is it fair to say if the financial mainstream does not talk about gold, the algos will not pick up on gold, and therefore maybe not consider it? Now, maybe I'm stretching things here a bit, but that's why you maybe don't get the frequency and the depth of the financial media saying the word gold, saying the word silver. Algos are taking over trading, but is there room for human intervention should algos go Skynet? Because so far, it really does seem the same way we are getting influenced. You can influence these algos.
Bulk of this volume coming from algorithmic machines learning, what have you, and ask you the question, does this create a huge systemic risk to markets and to the economy?
Well, these machines are not totally independent. I mean, human interference is still attached to it. So I would say,
if every machine said sell and they didn't put stops in, and they didn't put limits in,
Well, you would have a flash crash, wouldn't you?
why can't
But then-
all the
but
machines
then-
say sell at the same time if
Well,
80% of them?
They might. But at the end
So
of
it
the
can
day,
prove-
yeah, of course, and that's why we have flash crashes. And then you have the flash crash, then the human interferes and saying, well, this is too low, or the machines have been going too far, and then you've got a bounce.
Yeah, but by then the passive industry has been destroyed if it lasts longer than a couple of nanoseconds.
Absolutely.
So
Absolutely, that's the risk.
And then people get huge real world losses. So rather than actually, and because as you know better than I do, so many people are trading in this market on margin, on enormous leverage. Now, when you combine margin and enormous leverage and
Yes.
passive investments and machines
But
that
we-
all say sell, that is horrific
We are
potentially.
long-term investors,
Yeah.
so supposedly
You are.
we don't have stop losses that would create what you are saying.
You are, but you know as well as I do, the average stock holding has gone down and down and down. And your industry, which says, look, we want to do this for 3 years, we want to do it for 5 years, we want to hold stocks for 7 years potentially,
Yes.
which is incredibly old school as well, and Buffett-like in many ways as well. But there are millions of investors who will, I was going to say in a very non-politically way, who will lose a lot of money because of their leverage, because of their passive investments, and because of their margin trading.
Well, that's the risk you're prepared to take, aren't you?
But do they know that?
Well, of course
Do they know they're taking those
Well,
risks?
they're grown-ups.
Amazing. We're all adults and should know the risks. You see how these guys get upset when it affects their trades, when the algos push the price, causing real world losses and damage. You guys have seen the flash crashes. We all have seen flash crashes where for no reason all of a sudden prices drop. They drop significantly and all of a sudden they bounce back up mysteriously. We see this. We see it all. I want to say all the time. But thing is, hey, if it's gold and silver, things they never talk about, where algos don't pick up on, hey, they could care less. And these are the people that somehow think money will shield them from anything and everything bad that may happen in this world. Don't make this mistake. Don't make this mistake. The situation is ripe for systemic risk. Do not make this same mistake. So I think we do know that algos are influencing the markets. Other side of the coin, what happens when we do get a big movement from gold and silver? And it is seen in the media, or at least social media space. Remember this.
Joining us now is Michael Whitmire, CEO and co-founder of JM Bullion. They are an online precious metals dealer. They typically got about $1 million in sales on a Sunday, but Michael, from what I understand, and correct my numbers if I'm wrong, you guys did 27 million over the weekend?
Yeah, just over 27 million on Sunday alone. Substantial numbers for us, enormous increase in demand that we've been seeing since essentially Wednesday night when those Wall Street Bets posts went up. So we've been scrambling, working hard, trying to keep up with demand.
Yeah, and a little bit later on, we're going to talk about whether or not these are real, quote, retail traders, or is a lot of conspiracy. Are these hedge funds in disguise?
Yeah.
Based on the order size that you're seeing, Michael, can you determine in your years of experience maybe who these buyers actually are?
Yeah, these are individual investors. We're seeing a lot of activity from our existing customer base who we've developed over the last 9 years. We are seeing substantial increases in new customer activity as well, but it's across the board and it's individual investors. Average purchases for us range between $2,000 and $3,000. We do have customers who purchase 6 figures or larger, but on the whole, this is individuals who are purchasing physical silver for delivery.
Are they buying coins? What exactly are they buying?
Yeah, so it's a mix of coins, bars, and rounds. We typically have about 1,000 silver products in inventory available for purchase. We're getting so cleaned out right now that we're actually, last I checked, down to about 80 items in stock, which is a number I've never seen before and never thought we would ever see.
All right. So that was interesting where we had a lot of movement to the upside that was making news. Now, increase in demand by individual investors. If you notice what he said individual. He didn't say hedge funds or these other big players. He said individual. So these are real people. Increase in new customers. These are real people. Big orders do come in, and yeah, they can wipe out supply. They can get wiped out in hours, in days, much less weeks. And this is what happens when even a small fraction of people move towards precious metals. They can really get wiped off the shelves pretty easily. But again, this is real people. And it was news, making news. And then we saw the prices moving up. But here's more.
So you're almost out of silver inventory. So if you want, I'm sure, to sell silver, which means you got to go get more. Can you go? Do your suppliers have more silver?
No, the entire industry is frankly wiped out. So what we're selling now is predominantly future deliveries. So we can secure silver that will be produced and shipped to us in the coming weeks, and we can offer that for sale to our customers so they can lock in today's spot price and take delivery in the future. But in terms of actually finding live silver that you can purchase and receive today, it's becoming impossible.
Okay, so getting supply from dealers can be impossible. I recall during that time, refiners were trying to get bullion from bullion banks. Okay, this is what I recall. Some bullion banks were not selling their silver to refiners, who in turn create the silver products for retail physical investors like you and me. Now, I question where maybe the banks either didn't have the silver to sell or physically deliver. Kind of made me wonder back then. So the refiners were looking for silver from bullion banks, and some of these bullion banks weren't supplying the refiners. Had the question, asked myself why.
Who is are you buying for the Federal Reserve? I mean, who do you buy from, if you don't mind telling us?
Yeah, so one of the primary suppliers is actually the U.S. Mint. So they produce our most popular silver product, which is a 1 ounce coin called the American Silver Eagle. They have the capacity to make around 500,000 ounces of that product on a weekly basis. For context, since Friday night, we've sold over 260,000 ounces of those, and that would have been substantially higher if we had not run out. So that kind of puts into context, we're just one dealer in one geographic market. That's kind of the shock to the supply chain that we're going to be dealing with for months.
And can you correlate, and I know you're not exactly in tune, Wall Street Bets, Wall Street Silver, which is a new Reddit subreddit created a couple of days ago. Have you been able to poke around? Do you think there's a direct correlation in terms of your order flow and sort of this online attention the last really 3 to 4 days? Direct correlation?
Absolutely. It was like a light flipping on overnight Wednesday, and it just went crazy Thursday, Friday, and over the weekend. So as I mentioned, we did see increased activity from the existing customer base, but I believe that was actually driven by, essentially media attention on this story and, silver being in the headlines as a potential target of Wall Street Bets. So.
All right. So this kind of keeps getting better. Is the Federal Reserve a supplier of silver? Kind of shows you how much maybe the markets really know about where supply comes from. And I think a lot of us didn't know that it's actually bullion banks in instances that do even supply refiners. Nonetheless, mainstream media picked up on Wall Street Bets, and maybe, hey, just maybe all that chatter was picked up by the algos, because we know these algos, they are listening. These algos are listening. And maybe, I'm just saying, maybe that pushed up the price, because remember, the silver market is mainly industrial, not retail investors. So it's mainly industrial. So let me ask you, what is more likely to drive the silver price up? Would it be a very small retail market buying silver, or the noise that media, both social media and mainstream, pick up on? And if they keep promoting it, getting it out there, saying more gold, 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 silver, 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 waking up people to gold and silver, would that move the market? And then would that be something that algos would see? Of course. Now, I know there's industrial demand. However, think of how algos recommend things to you, which we were told is in part by taking in words. And then we saw a whole bunch of words during the Wall Street Bets silver squeeze.
Silver futures surged 8% in just a day, touching an 8-year high on February 1st, 2021. The pop believed to be driven by online retail traders who were trying to squeeze the market. And this year, the physical silver market is expected to post another deficit, only to be made worse in the coming years because of increased demand from industrials and clean technology like electronics to EVs. If silver futures continue past this key technical level of $24 an ounce, miners like Pan American and others could follow suit. all while supply is expected to remain strained.
We do sell silver off our website to the retail investors, but it takes us an enormous amount of time to actually convert silver from the mine into retail products. The mints just don't have the capacity. It takes between 6 to 10 months for us to turn around metal into a retail product.
All right. So deficit is expected to continue. Silver's usage is in so many things that continue to rise. And in normal times, you would say, what's not to love about silver, right? The future for silver usage on the industrial side is tremendous. And then again, the silver on the investor side, especially during these times of inflation and whatnot, it's also tremendous. So what's not to love about silver? But why isn't it moving all that much? So there's a lot to love about silver. I mean, but maybe, as I said, what's going on with the price, or maybe you like this low price. I don't know. Maybe you do. But remember, algos more or less, they have the biggest say in how markets move. And as we saw earlier, when algos get it wrong, human intervention will make it right. Again, this is what we just looked at earlier. Sometimes human intervention, though, can be seen as flat out manipulation. So we may think it's the algos who may be moving markets, but then again, it's also humans.
And in many respects, the resiliency and the market structure of the futures market really were able to tamp down what could have been a much worse situation in the silver market.
All right. So what's that manipulation? How does a futures market tamp down? How does it tamp down the price? Did algos pick up on all the silver chatter from the days before the silver squeeze on social media, right through perhaps seeing investors deplete and push up the price, only to see a human algo come in and tamp the price back down? You look around Twitter, you see people like you and me. Michael Saylor is one of them. They track various shops around the world and how their inventory moves. So let me ask you this. Why wouldn't an algo? Why wouldn't the creator of an algo? I would not be surprised if, yes, the creator of an algo, they do watch silver inventories in retail shops, maybe on the COMEX as well, and calculate the physical demand, therefore the physical price. Question then becomes, how many more times will we see tamp downs via human intervention? Whatever you think, in all this speculation, I think we all agree simple fact is algos, they are taking over, feeding us, creating our reality, shaping how we think. Question then is, what do we do? What do we do? Because by all accounts, silver and gold price-wise should be up, but a lot of us already know the name right now is to accumulate. I mean, I don't want to say game, it's not a game, but the name of the game is to accumulate silver and gold right now, regardless of what the price is trying to tell you. So again, that's going to wrap up this topic of the day. I don't think it's too far-fetched with what we're saying, because algos, they do have influence, maybe even control in so much of your life. As I said, whether it's news feeds on Twitter or Facebook or Spotify, playlist that's created, trying to figure out what you like, YouTube recommending channels, trying to figure out what you like, what you don't like. You're influenced. You can search something on Google, search something on DuckDuckGo, search something on Bing, all different search engines. You're going to get a different list as to what's the number one item in search. So again, algos definitely do have influence. I think they do influence the markets. I mean, obviously they do. The gentleman at the top of this main topic, he had said what algos are specifically meant to do. So it is there. It does have influence in the market. So I just want to take a look at a few comments here from you guys. Ralph Steiner, look at London LBMA. Everyone is sucking all their metals out of London. People know something is up and they are draining the LBMA dry. Ralph, to add to that, as mentioned, that's where we are seeing the flow of metals moving from west to east. Now, typically, it's not a big deal because the metal flows back and forth, west to east, east to west, west to east, east to west. But things are different this time around. I'm not so sure if it's going to flow back. if it's going to flow back to the West this time around once it's flowing to the East. It's a different set of circumstances. You got new challenges to the world's reserve currencies, new challenges to resources throughout the world. I'm not sure if it's going to flow back this time around. What else? Comments are out there. Henry, I'm playing the game by stacking price aside. I feel like I'm winning. Yeah, Henry, I've said this as well. I've never bought an ounce of silver or an ounce of gold as an investment. I've always bought it understanding that this is a hedge, this is an insurance. The way things are going, we are going to see changes to the monetary system. We are going to see changes in power, in global influence, in these things, and you just don't know what uh, money will be, what money will become, because people don't like, or outside of the US, internationally, a lot of countries don't like the US dollar. It gets weaponized and things like that, and they don't like it. So they create things that'll challenge the US dollar, which then means we have to understand that if we value things in US dollars, but the rest of the world decides, hey, we don't want to value it in US dollars anymore, what is it then valued in? So for that reason, I look at things, especially like gold and silver. Uh, it's often been called a neutral reserve asset. It doesn't care what other currencies are going to do. It's going to hold its own. It's going to take that position of being that store of wealth, that hedge against inflation. So whatever else happens around it is noise, is noise. All right, take a look at a few more comments here. Uh, Carrie Ellen, I appreciate that. Um, I am looking at trying to revamp this whole live stream and things like that. We've got to get the numbers back up. Maybe I need to change some things. Again, reformat some things, approach things from a different way, or whatever it is. Um, I appreciate that comment, but I think you folks see, numbers are down, numbers are slow. We're not. We need to do better. So I think in time you're going to see some changes. Hopefully they're going to be for the better. Rolf Steiner, I did not see this. Russia has basically accused Britain with an act of war today in destroying the Nord Stream gas pipelines. I didn't know this. I didn't see it. This is an incredibly serious charge. Okay, I'll have to take a look at that. Let me move on to the closing commentary. Algos, yes, they are in our daily lives, and in many ways, they do control many aspects of our daily lives. What we search for, our news feeds, our music on Spotify. Again, all these things, all algo driven. Sometimes I see you guys on Twitter. Next thing you know, I don't see you guys for months. So even my news feeds changed. Everyone's news feeds changes, and the market makers, they are also using these same algos, which are going to influence us in our investments. What in the world is real anymore? I mean, we have news and fake news, we have truths and we have narratives, we have money that is really nothing. We just believe it to be money because that's what the system gives us. In the name and game of monopoly, hey, we just write more money on a piece of paper. It's kind of what they do, right? They gave it to us by taking away what was real. So many things in our lives that once were real, they're not anymore. Can we not define, as an example, can we not define what a woman is anymore, as an example? The point here is, as we go deeper into this fantasy land, eventually a dose of reality will come in, and that reality is going to come from the financial system in a breakdown, systemic breakdown. And it's going to wipe many of us out if we don't understand what's going on. And part of understanding what's going on is what gold and silver do. You got to get things that are real. Real things are going to help real people. Remember that real things help real people. And much of it starts with real money. Start to understand the fakery all around you, as the late great Rob Kirby would say, the chicanery all around us. And how real money is one part of the shield that we are going to need. I'll take one last look at the comments here. Let's see. Harold B, absolutely correct. No state shall coin money, bills of credit, things like that. Harold B, that within that, the key word was state, and I believe this is how they worked around it, because the federal government is not a state. So the federal government could legally do it, which they did, and they did do it. But they weren't a state, so they weren't held to that to that part of what was written in the Constitution. Let me see what else is out here. Yeah, James Richter, R.I.P. Rob Kirby. He was one of the he was a truth teller for sure. He speculated like all of us, no difference there. But he also gave you the truth as best as he knew it. Peter Frowine, I wish, like I said, there's things that got to change, and I'll start with myself. I mean, you always have to take a look in the mirror first. Uh, we do know YouTube has been playing games with us. I can go back and pinpoint it to a specific time period where we, really started kind of tapering off, where we had our flash crash, and we're still trying to get back from that flash crash. So I appreciate that comment. Subscribing helps, giving it a thumbs up, sharing it helps. But I am going to change the format, maybe to help, to help keep people attracted much longer. I think one of them are the live streams. We may have to shorten them out and change it a bit. Henry, you're welcome. Vincent, I don't know, he's still on vacation. Maybe he's on a plane, but whatever it is, Vincent, just enjoy yourself. And when you get back, welcome back. And for everyone else, I hope to welcome you back next week. In time, I do think things are going to change, as I mentioned. Pay attention to the noise, because it's the noise that they don't want you to hear or don't want you to think about. But it's the noise that I do think we do have to start listening to more. And maybe the noise is really covering up the things that we really need to see and understand. So anyway, I'll see you guys next week. You guys have a good Halloween. Make sure you check the candies before you open them. You never know what people put in these candies anymore. Remember my parents telling me that. You guys have a great Halloween. I'll see you guys next week. Take care.